Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us.
Hello, this is Hall Martin with Investor Connect. Today we're here with Kevin Van Eekeren of Fulcrum Investing. Kevin, thank you for joining us.
Thank you so much for having me.
Great. So what was your background before investing in early stage companies?
I started out in a family business that my grandfather started in 1958. Worked there for $2 an hour instead of going on spring, winter, and summer breaks like most kids. And then really fell in love with business at an early age. Then after college, I went directly into a SWAT team as a civilian. It was something I was just interested in. I wanted to do that before I really got into business because I knew once I became a CEO, which I always wanted to be, I would have to dedicate my life to that. So I ended up spending 4 years as a civilian on a SWAT team, trying to understand the market. And then I started my first company, first as a charity and then as a for-profit company, training SWAT teams and police departments all over the nation.
So we have a number of investors who listen to the show. What's your advice for those guys who are just now starting to invest in early stage companies? How would you advise them?
I think there's a few big things that I learned going through the process of starting my own investment process. The first big thing is you got to understand that all of us have massive biases. We have to accept those. And if you are really excited about something, it is often, at least for me, something that I know I have to be extremely careful about, or I just don't invest in at all. And I know that sounds odd, but I would much rather go into an investment agnostic as far as the topic, but love the team and be able to support them and let the CEO be the expert rather than love so much what they're doing and not see the faults where they are. Because then investors, especially for early stage, our job is to provide really healthy feedback for the founders and their team. And how can we do that if we're so in love with what they're doing that we overlook those things and they go down those roads anyway? So that was the first big thing that I had to learn the very hard way. And then the other big thing is that you have to decide whether you're going to invest in 1,000 startups over your lifetime or 100 or 10. What is your strategy? And then stick to that strategy and try not to change it to the best of your ability, because you really got to think that out. If you start jumping all over the place, it's going to be really hard to understand what did and did not work.
Well, that's good advice. And it sounds like you've seen a lot of the early stage investing and you see the state of it today. Where do you think investing is going for early stage companies?
More and more, at least we in the Midwest, are seeing a very strange trend where investors are being a little bit more predatory than normal. I think that that's because we all see that the market is somewhat unsustainable. It's getting a little bit too high. We're already starting to see it peak and level off a little bit. And so investors are jumping on the bandwagon and trying to get everything they can before they have more trouble raising money for their own funds. But I also am seeing a trend that is somewhat interesting in the sense that some companies that may not be all that sexy, but are phenomenal business platforms and phenomenal teams are kind of unable to raise money. And yet, a sexy platform, a sexy company with maybe an okay team seems to be able to raise money in 2 or 3 months and effectively and time again. And so I'm wondering if there is a movement in, as more wealth grows, more people start investing. And I'm wondering if it is those angel investors that aren't as well versed, aren't doing it full time, that are kind of pushing toward that trend. I'm not sure, but it's a very interesting thing to see, because if you're a full-time investor, you can look for those not so sexy term sheets and or companies, I should say, and get good terms on those investments because a lot of people aren't investing in them. So it's something to look out for.
That's a good point. It seems like a lot of the funding has shifted to later stage, bigger name companies in this IPO frenzied world, trying to be on that side of it. And it could be harder for the earlier stage people to raise funding because a lot of the money shifted up and out of their range. And I guess it's just part of the natural funding cycle that as a wave goes through, it eventually goes to the later stage and finishes and then starts back over with the seed stage. But we'll see how that plays out for the rest of this year. So tell us more about the investment thesis for your fund and what you guys look for.
So we are agnostic as far as industry. Anyone that knows me knows that I know literally less than zero about fashion, yet I have several fashion investments. And we invest in tech to restaurants to everything in between. So we're very agnostic. I have a team of people that are experts in many different fields so that I can invest intelligently in many different fields. The biggest thing I want is a brilliant team. I'm not overly concerned about the product or the service. Of course, it has to be good. It has to work. But a good team will make a decent product sell really well. The opposite of which doesn't usually work out well. So we like to invest in companies. And the biggest part of our thesis is I've had to raise money and I absolutely hated it because it would take 120, sometimes 180 days to hear that an investor is not going to invest. And I thought, this is insane. How can this work? And so I developed a 30-day process because I went through that so many times and it was so painful. So we try and put entrepreneurs first. And that's kind of the beauty of having a family office and not having LPs is we can take a little bit of a hit on the profitability, take a little bit of a hit on maybe making a few less investments than we'd like so that we follow a process that we feel really good about.
That's great. Do you have any particular startups you funded, maybe one or two portfolios you can talk about that highlight your thesis?
Yes, absolutely. The first is the Black Sheep Online. They're a collegiate media company that is just killing it. They're in over 100 campuses nationwide, and they're really tapping into the collegiate market in a way that many have failed to do. So that's really exciting. I've been on that board for 4 years now, and it's great to see such a brilliant team come up with something so revolutionary and deliver time and time again. That was a really exciting one. And the other one for me is Print With Me, which is a printing service essentially that you can go to any place in your local city. They're all over the nation, and you just download the app and you can print something instead of owning a printer. So it's obviously in major cities. And for someone that is a technological moron like myself, where I'm lucky if I can operate a computer, dealing with printers is hell on earth. And so just being able to use the service is great, but seeing a really smart guy like John as the CEO try and find really unique ways of spreading such a cool technology in such a cheap way has been really revolutionary in the way I think now about reducing CAC. And so he's taught me so much, and that's what I really love. I love working with people who are so smart and come up with these really innovative ways of doing business so that then I can bring those really innovative ideas to other startups I have and kind of help the community as a whole.
That's great. Those sound like two very good portfolio companies. As you look at these startups, what are the challenges they face in starting and growing their businesses today?
I think there's a lot of misconceptions people have, especially when they're first starting their company. It sounds like a great idea to work for yourself and maybe work a little bit more than 40 hours a week. And as you know, I've listened to your podcast, and when I hear you talking about it and your guests talking about it, we all know that when you work for yourself, it's 80 hours a week instead of 40. But I think a lot of people have that misconception. So people need to get around the fact that this is going to suck for a while, and you just got to work through it. And I think the other big thing is that money does not, unless that money is in your bank account from an investor, it's not there. And so don't go down the road of assuming because you had some really good conversations, that means you're going to get money. make sure that you stay on top of it, make sure that you work to have every round oversubscribed, and do your put so much work forth in the raising process that it is inevitable that you will finish and fill that round. And I think that your investors and your employees will be much happier for it than hoping it works out and seeing it not work out in the end.
Good advice. So if you had to pick a couple of subsectors or applications out there that are good opportunities to pursue today, what would you choose?
I think what's really primed for innovation is farming. The average farmer today is something like 73 years old. And the farmers that aren't that old are doing small scale organic. So robotics in farming, genetic engineering in farming, a lot of software applications in farming will go a really long way, especially if it can be applied to medium to large farming practices. That will go a hell of a way. The other area I see a lot of innovation coming from is kind of related to that, and that's the food market. Today we have a very complicated and ineffective way of labeling our food. And if there is a way we can help educate customers around food and what labels mean and what is a label and what is marketing, I think a company could do some real damage to that industry.
Do you think vertical marketing is going to really take off here soon? It's coming more and more, but as generations shift from one to the next and the need for more food comes to bear, do you think that's one of the solutions that will take up?
Perhaps. It's the challenge that I keep seeing in that world is that in general, like I said, not only are farmers old, but the people that run food companies are often very conservative people. It's often a family business. It's not a corporation. And so we see less and less innovation as those companies grow. And that's, I think, where we're going to see some real change in every sector of food, not just in the marketing and sales space.
Well, it's an interesting sector to continue to look at, certainly a critical one for us as well. So in the last few minutes that we have here, what else should we cover that we haven't?
Well, I actually wanted to ask you a quick question. What inspired you to start a podcast?
I ran a nonprofit called the Texas Open Angel Network, and the goal behind it was to educate investors on how to invest. They had a lot of people wanting to invest in startups, but they just didn't understand how, and there was really no place to go learn except join an angel group and start putting some money on the table, which was a pretty expensive way to learn. And so I started monthly meetups in Austin where we get together for lunch and have a couple of investors come out and give case studies and advice and talk about what they invested in. And that worked great. And then I had the challenge of scaling that across the country and realized, well, I was in the wrong format. If you're doing a physical meeting, it's just very hard to capture that information and take it elsewhere. So I morphed the program into a podcast series about a year later, around 2014, 15, and started doing everything online. Instead of inviting people for lunch, I would invite them for a podcast call and go through and capture their information and knowledge and so forth that way, so other people could learn how to invest and see how are other people setting up their investment thesis, what do they look for, what's the critical factors in these different sectors, and we've done over 200. So the goal was to educate angel investors, and along the way, I think we've also educated a lot of startups about the funding process and what people are looking for, which is always a critical factor in helping startups raise funding, is to have them look at it from the investor side at some point.
What I really appreciate about that is that you're going out and trying to help people, because you are so right that it is a very expensive way to learn when you're throwing even $10,000 into investments, let alone $50,000 or $100,000 into investments. So it's great that there's a resource out there, and I wish I knew about this a few years earlier, because I bet I would be even farther along. But I also think it's really important that B2B businesses really need to look at podcasts and other forms like this, because what is a great way to get into a customer? It's to have a relevant podcast, invite them on, have no sales pitch and just talk to them about what they're doing. Of course, they're going to want to talk about themselves, and that gives you a great in to gain them as a customer. So I was wondering if that might have been part of your motivation.
Well, it's also to get inside. We do have startup CEOs come on and they do sector reviews. They know their industry very well and they talk about their industry, and it's very enlightening to find out, especially for an industry you're not familiar with, how it really works, how much money is going into it, what the challenges are, regulatory, technical, market, and what the big hurdles are that companies have to take up. And I found many investors excited about that because there's so many sectors to keep up with. It's just very hard that if somebody can break it down for you in a 20-minute podcast, that's very helpful to learn about things like robotics or autonomous vehicles or AI. And it may not cover everything, but it covers a good chunk of it that you can start to understand it better. So that was the other angle. So I think everybody in the space, the companies and the investors, have something to bring to the table to talk about this and we can learn from.
I absolutely agree. And one final thing, I want to say that I really appreciate the emails you send out. They are so helpful and they really keep me aware of what's going on outside of my tight circle of investors and entrepreneurs. It's awesome.
I appreciate that. I want to thank you for taking time to talk with us today. How best for our listeners to get back in touch with you?
They can go to fulcruminvesting.com. They can apply for funding. They can ask us questions and sign up for our newsletter.
Well, great. I will point them there in the show notes. Thank you for joining us today and hope to have you back for a follow-up soon.
Thank you so much and have yourself a great day.
You too.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.